Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about the top quality and the best Canadian stocks in each sector of the Canadian market, and then show you a diversified high quality portfolio that can be constructed based on the combination of these stocks. This is a video requested by one of the subscribers of the channel long time ago, and I finally was able to make this video. For each sector I introduce 2 or 3 candidate stocks, and then I choose one of them as the highest quality Canadian stock in that specific sector. Before starting the video, I want to emphasize that this video is not a financial advice for you to buy, hold or sell these stocks. This is just my personal opinion, and you should always do your own research before making any financial decision. With that being said, let's start this video. Okay, so the first sector that I'm going to look at today is energy sector. We have tons of high quality energy companies in Canadian market, from oil producers to pipeline companies and even companies that operate in renewable energy segment. Between all the possible candidates, I chose Canadian Natural Resources, or CNQ, which is a producer of crude oil, natural gas and natural gas liquids based in Calgary, Alberta. Enbridge, which is a pipeline and energy transmission and distribution company based in Calgary, and Suncor Energy, which is an integrated energy company focused on oil and oil refinery services based in, again, Calgary. So my choice for the top Canadian stock in energy sector is Enbridge. Enbridge is a Canadian energy infrastructure company which has 5 divisions: liquid pipelines, gas transmission, gas distribution, renewable power generation, and finally energy services. 58% of their 2022 earnings is coming from liquid pipelines, followed by 26% from gas transmission division. And the renewable division is only provide 4% of their earnings, which means it's pretty much nothing at this point in time. The company HQ is located at Calgary, and their shares are traded on TSX for almost 52 Canadian dollar at the time of recording this video. They pay a significant dividend with a starting yield of almost 7%, 6.78% to be accurate, and the market cap of the company is around 106 billion Canadian dollar. I think Enbridge is a high quality company operating in the energy sector, and it is one of those less volatile stocks in this sector of the market. With that amazing starting dividend yield and long history of paying out and increasing their dividend year after year, this would be a great stock to pick for a diversified Canadian stocks portfolio. The second sector that I'm going to look at today is industrial sector. We only have a few high quality companies in Canadian market in industrial sector. The quantity of companies is low, but the quality of these businesses is top notch. Between the possible candidates, I chose Canadian National Railway, CNR, which is a supply chain provider and railway company based in Montreal, Quebec. Canadian Pacific Railway, which is another supply chain provider and railway company based in Alberta. And finally, Waste Connection, which is a waste collection, transfer and disposal company based in Woodbridge, Ontario. My choice for the top Canadian stock in industrial sector is Canadian Pacific Railway. CP owns and operates the railways and related transportation businesses across more than 13,000 miles network in Canada and US, which we can see it here, and soon in Mexico. The company HQ is located at Calgary, Alberta, and their shares are traded on TSX for almost 104 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of almost 0.75%, and the market cap of the company is around 97 billion Canadian dollar. Canadian Pacific is one of the largest Canadian companies and a recession-resistant business which was able to consistently grow their business and their dividend in the last 20 years, despite various basic economic challenges that we had in the world. They have an undeniable business mode with pretty much no competition in Canada other than, of course, Canadian National Railway, the other railway here in Canada. For that reason, I think Canadian Pacific is a great stock to add to a diversified Canadian stocks portfolio. The next sector that I'm going to look at today is materials sector. We only have a few high quality companies in Canadian market in this sector. Between the possible candidates, I chose Barrick Gold, which is a gold and copper miner company based in Toronto, and Nutrien, which is a potash producer and agricultural services business based in Saskatoon, Saskatchewan. My choice for the top Canadian stock in materials sector is Barrick Gold. Barrick Gold engaged in exploration, mine development and production, and the sale of gold and copper. The company owns gold and copper mines that are located in various countries around the world, ranging from Africa and South America to Middle East. The company HQ is located in Ontario, and their shares are traded on TSX for almost 22 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of 3.23%, and the market cap of the company is around 40 billion Canadian dollar. The share price of Barrick Gold is, of course, really dependent on the gold and copper price, and therefore it will fluctuate significantly over time and goes over these boom and bust cycles. I personally don't like investing in a commodity heavy businesses, but if you're a fan of precious metals and if you want exposure to this area of the market, Barrick Gold is a solid choice. The next sector that I'm going to look at today is utility sector. We have a few high quality companies in Canadian market in this sector. Between the possible candidates, I chose Emera, which is a power utility company with a focus on electricity distribution based in Halifax, Nova Scotia. Hydro One, which is another electricity transmission and distribution company based in Toronto. And Fortis, which is another power and electricity provider based in Newfoundland. My choice for the top Canadian stock in utility sector is Fortis. Fortis operates as an electric and gas utility company in Canada, United States, and even on Caribbean countries. The company HQ is located in St. John in Newfoundland, and their shares are traded on TSX for almost 55 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of almost 4%, and the market cap of the company is around 26 billion Canadian dollar. Fortis is one of those companies that grow their business slow and steady. They increase the rates they charge each year by a predetermined percentage, and therefore they can consistently grow their revenue and profits and return that profit to shareholders as a dividend and dividend hike. I should mention that Fortis actually grew their dividend for 48 years now, and they have an amazing history of increasing their dividend year after year. The next sector that I'm going to look at today is financial sector. We have 5 big banks, a few insurance businesses, and a number of smaller financial institutions in Canada in this sector. I personally think Canadian banks are top of the food chain, world-class companies with very low risk of investment. Between the possible candidates, I chose Royal Bank, which is the largest Canadian company based in Toronto. Toronto Dominion Bank, which is the second largest Canadian company, and it is of course based in Toronto, and BMO, or Bank of Montreal, which is the third largest Canadian bank based in Quebec. My choice for the top Canadian stock in financial sector is TD Bank. Toronto Dominion Bank, or TD, is my favorite Canadian bank stock with a huge market cap of close to 170 billion Canadian dollar. They have exposure to both Canadian and US banking systems via a network of over 1,000 branches and 3,000 ATMs in Canada, and over 1,100 stores and 2,600 ATMs in United States. They pay a dividend with a starting yield of 4.13%, and they have an amazing track record of paying out and increasing this dividend year after year for a long time. They never cut their dividend even in the financial crisis of 2008. They have strong regulations by Canadian government, and their payout ratio is less than 50%, which means the dividend is totally safe. For all the reasons I mentioned here, I think TD is a great choice for any Canadian stocks portfolio. The next sector that I'm going to look at today is consumer discretionary sector. We only have a few high quality companies in this sector of the Canadian market. Between all the possible candidates, I chose Restaurants Brands International, which is a combination of 4 fast food chains, including Burger King, Tim Hortons, and Popeyes, and it is based in Toronto. Aritzia, which is a fast-growing fashion retailer based in Vancouver, British Columbia, and Canadian Tire, which is a conglomerate consists of various retail businesses like Canadian Tire stores, Sport Chek, and Marks stores based in Toronto. My choice for the top Canadian stock in consumer discretionary sector is Canadian Tire. Canadian Tire is a diversified multi-channel company, which means they own various brands, products, and services. In general terms, the company operates in 3 segments: retail, real estate, and financial services. Canadian Tire store itself is almost a Canadian version of Home Depot and is my favorite place to buy home improvement equipment like paint and plumbing equipment. The company also owns other retail stores like Mark's, Atmosphere, Party City, and Sport Check. Canadian Tire also owns Canadian Tire gas stations, and they also own a few brands like Helly Hansen in clothing and MasterChef, which produce gas grills and some kitchen appliances. And they also have their own financial segment via Triangle MasterCard and Triangle Reward programs. The shares of Canadian Tire is traded for almost 175 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of almost 4%, and the market cap of the company is around 10 billion Canadian dollar. I think Canadian Tire is another great choice for a diversified Canadian stocks portfolio. The next sector that I'm going to look at today is consumer staples sector. We only have a few high quality companies in Canadian market in this sector. Between the possible candidate, I chose Loblaws, which owns and operates various grocery, retail store brands, and even financial products based in Brampton, Ontario. Dollarama, which is a dollar store chain retailer based in Quebec, and Alimentation Couche-Tard, which is a grocery and also gas station chain retailer based again in Quebec. My choice for the top Canadian stock in consumer staple sector is Alimentation Couche-Tard. Couche-Tard owns more than 14,000 convenience store and gas stations in 24 countries around the world, including Europe, Asia, Canada, and pretty much every single state in United States. You probably visited at least a few of their locations in your life if you ever traveled around the North America and stopped at a gas station under one of the brands Circle K or Couche-Tard, or in Europe under the brand Ingo. So according to the last statistics, they sell 35 million gallons of fuel, 750,000 cups of coffee, and 490,000 hot dogs every single day around the world, which is an insane amount of sales. Alimentation Couche-Tard is currently trades for almost 65 Canadian dollar per share. They pay a dividend with a starting yield of 0.85%, and the market cap of the company is around 65 billion Canadian dollar. While the dividend yield seems to be very low, they are increasing their dividend exponentially in the recent years, and you can expect to see significant dividend hikes in the coming years from this amazing business. I think Alimentation Couche-Tard is a great recession-resistant stock to add to your Canadian stocks portfolio. The next sector that I'm going to look at today is information technology sector. We don't have many choices in tech sector in Canada and only have a few Canadian companies in this sector. Between the possible candidates, I chose Shopify, which is an e-commerce platform and online shop generator based in Ottawa, Ontario, and Constellation Software, which acquires, builds, and manages software companies, again based in Toronto. My choice for the top Canadian stock in information technology sector is Shopify. Shopify is an online store builder and an e-commerce platform that takes care of infrastructure and provides additional services to small and medium-sized businesses like payment processing, marketing, analytics, inventory, and order fulfillment. Shopify makes money in two different ways. The first is subscription revenue, which refers to the monthly recurring revenue that Shopify gets from the individual businesses that use their platform. And the second revenue stream for Shopify is merchant solutions. This is the segment that takes all of other revenues and is highly dependent on the success of the individual businesses that use the platform. So for example, payment processing fees, currency conversions, referrals, advertising, etc. All of that is included here. Shopify is currently trades for 58 Canadian dollar. They don't pay any dividend and the market cap of the company is around 75 billion Canadian dollar. This is of course a volatile, high risk, high reward stock, which is still trying to grow their revenue and profitability metrics. If the profile of the company fits your risk tolerance, it can be a small part of your portfolio to benefit from the potential upside of this business, but always be careful when investing in a volatile stock like Shopify. The next sector that I'm going to look at today is communication services sector. We only have a few companies in Canadian market in this sector. Between the possible candidates, I chose Bell, TELUS, and Rogers, which are all similar in terms of the business model. They all provide internet services, phone plans, and few additional services on top of that. My choice for the top Canadian stock in communication services sector is TELUS. TELUS provides a range of telecommunications and IT products and services in Canada, ranging from sales of a smartphone and smartphone products, to telehealth and smart home installation services. TELUS shares are currently traded for almost 28 Canadian dollar. They pay a dividend with a starting yield of 5%, and the market cap of the company is around 40 billion Canadian dollar. I think this is a relatively stable business with a stable cash flow which can provide an attractive dividend for investors, and therefore it can be a part of your stocks portfolio. The last sector that I'm going to look at today is real estate sector. We have quite a few high quality companies in Canadian market in this sector. Between the possible candidates, I chose RioCan, which is a mostly retail focused Canadian real estate investment trust based in Toronto. Granite REIT, which is an industrial focused real estate investment trust based in, again, Toronto. And finally, Killam Apartment REIT, which is a residential focused real estate investment trust based in Halifax, Nova Scotia. My choice for the top Canadian stock in real estate sector is Granite REIT. Granite gives you exposure to properties in the areas of logistics and industrial warehouses in North America and Europe. They have already a diversified portfolio of various industrial and logistics properties in 6 countries around the world, including Canada, US, Netherlands, Germany, Austria, and Czech Republic. The largest tenant of Granite is Magna, followed by Amazon, and we also have stable and large businesses like Walmart and Samsung among their tenants. The shares of Granite is currently traded for $85 per share. They pay a monthly dividend or distribution with a starting yield of 3.75%, and the market cap of the company is around 5.5 billion Canadian dollar. I think Granite is an amazing real estate investment trust with both growth potential and a consistent dividend payout, which is of course increasing every single year. And that's why it can be a part of a diversified Canadian stocks portfolio. I want to add 2 other Canadian stocks to this list as a bonus. The first company is a highly diversified company by itself, and it is Brookfield Corporation. Brookfield has many different types of businesses ranging from real estate to asset management, renewable energy, insurance, and infrastructure businesses. So what they do, they find undervalued assets and businesses around the world and invest in those assets to realize their intrinsic value and return the profits to the shareholders. I already discussed this business in detail on the channel, so I'm not going to add much here, but I think Brookfield is a great choice for any Canadian portfolio. My other bonus basically choice is a small cap high growth company, which is EQ Bank. EQ Bank is the 7th largest Canadian bank and a 100% digital bank, which is growing fast and has amazing fundamentals. I talk about this stock a lot on my channel, so if you're interested to know more about EQ Bank, watch my previous videos on this stock. So, if we combine all the stocks that I mentioned here in this video, we will have the following Canadian stocks portfolio, which I think is actually very solid. Amazing diversification in different sectors, solid companies with a combination of dividend stocks like Enbridge and Fortis, growth stocks like Shopify, and hybrid dividend growers like EQ Bank and Alimentation Couche-Tard, with some core positions like TD and Brookfield. Let me know what you think about this list, about this portfolio, and this basically sample portfolio, and if you choose any different Canadian stocks in each sector. There you are, guys. I hope you enjoyed the video, and if you're interested in Canadian stocks and Canadian market, make sure to subscribe to see similar videos. Thank you for watching, and I hope to see you guys in the next video. Farewell.